Propfirms are one of the greatest opportunities that have arrived in the trading space these past few years, and the return on investment is a no-brainer if you know how to trade these firms. With the increased demand of traders trading these firms, I've seen a lot of traders using them in a disadvantageous way, which is why I want to show you guys how to effectively trade them. And this is coming from someone who has been trading them since 2022, back when there's only two big firms out there, Apex and Topstep. Now, starting off, this is not a video saying which firm's the worst, which firm's the best. I will give my opinions on every single one of these firms, but it's more so to give you guys information on how to trade each one of these firms effectively. Each prop firm has different rules and different payout structures, but it doesn't mean one is better than the other. It just means that it helps a certain type of trader more than another. Starting off on Apex, these guys always have an 80 to 90% sale. You know what code to use, but if you're paying full price, you're absolutely cooked. These guys did a full revamp a few months ago and changed a lot of their rules, which has made me like them even more recently. They now only have two account types. There are two big things that are different on intraday and end of day trail. Intraday does not have a daily loss limit like end of day trail does, and intraday trail trails live, end of day trails at the end of the day. On both of them, the evaluation rules are relatively the same, only 1 day to pass and no consistency rule. Now, looking at the performance account, which is the funded account, we have a 50% consistency rule, a daily loss limit on the intraday trail and the end of day trail. So in my opinion, you'd want to go towards the end of day accounts. Now, their old consistency rule used to be 30%, now it's 50, so that's a lot better. The max amount of accounts you can have is 20, and you can request a payout every 5 trading days. They also added an inactivity rule, so if you don't take a trade within 30 days, your account is closed. If you want to extend that, you can, you just have to submit a ticket. They also added a max payout request of 6 per account. So whatever the max payout is, multiply that by 6 before you have to restart on the evaluation phase again. Now, this is really to prevent people from running up $1 million P&L. This decreases the ceiling of how much you can make, but it increases the floor of payouts and how easy it is to get a payout. So in my opinion, a lot more people are going to get payouts, but it's not going to be a max $1 million payout. So in my opinion, it is a win because 99.999% of traders that trade with this firm are not hitting that huge P&L goal, and instead their floor to get a payout is increased. So almost every single person is benefiting, except for those 1 or 2 people that hit an insane number. Here's the max payout you can get per account. Majority of you guys watching this video will likely go for the 50K, as it is very easy to pass and get payouts with. So 1,500 for the first payout, 2K for the next, 2.5, 2.5, then 3K, 3K, then your account is closed. This totals $12,000 in one account. Multiply that by 20, that's 240K before you have to restart on an evaluation phase. My bad, it's 12K for the end of day accounts, 14.5K for the intraday trailing drawdown accounts. So you can see end of day, you have a smaller amount that you can request, and trailing drawdown, you have a larger amount. Now, how do you know if Apex is for you? If you're in the stage of scaling your accounts, this firm offers 20 accounts, which no other firm does, and gives you the highest return on investment possible. This used to be a firm that was actually pretty hard to get a payout with, but now it's the opposite. It's pretty beginner friendly as well, and the only bad thing I would say with this firm is you're capped to 6 payouts before they close your account. Now, this won't affect majority of people out there because they won't even make it to payout number 6, but if you do have that issue, it's a good problem to have. It just shows you know how to trade properly and scale your account. So if you can do it once, you can probably do it again. And if you get back to that eval phase, high key, just gamble your evals, and then once you're funded, you can scale your accounts again. All right, now let's talk about Lucid. They have 3 different plans, each giving 4 different options. I would say Lucid is one of the best firms out right now. They have pretty cheap accounts, one-time payments with 0 activation fees. I've never seen another firm do this. End of day drawdown, reasonable profit targets with decent max loss ratios. How do you know if Lucid's for you? There's a lot of benefits, and if I'm gonna be honest, I'll be surprised if Lucid's not for you. Firstly, the one-time payment instead of the monthly, so you don't have to rush your evaluation phase. If you usually take a longer time to pass your evals, you can do so without any rush or headache. If you like gambling your evals like me, you can go with the Pro plan because they don't have a consistency rule on the evals, but they do have a 40% on the funded. And if you don't want it on the funded, you can go with the Flex account, which has a 50% consistency rule on the eval, 0 on the funded. And if you hate evals entirely, you can go with the Lucid direct accounts, which is their straight to funded option. The only drawback in this is your consistency rule is at 20%. So let's say you make 2K in a single day, you have to make 10K total for you to request a payout. So if you are a high RR trader, I would not recommend going with these direct accounts because the consistency rule just literally screws you over. Now with the pro account, it is designed for you to take quicker payouts. So you can request a payout in 3 days on the pro account, 5 days on the flex account. And both of these accounts have 5 payouts until you're moved to a live account. Kind of different from Apex, closing your account after 6. This just moves you to a live account. So the maximum you can request on a flex account is right here. For a 25K account, you can request 5K total before you move to live. 50K is 10K, 100K is 12.5K, and 150K is 15K before you move to a live account. Now with these flex accounts, you can have 5 total. The max payout on the pro accounts is right here, which is a little bit more than a flex account. Amazing firm. If I'm gonna be honest, it would be pretty rare if you don't want to trade with this firm. If you are a high RR trader, you can look to trade the flex accounts. If you're a lower RR and you don't really care about consistency rule once you're funded, you can go with the pro accounts. They provide the best of both worlds. If you don't care about consistency rule, you can go with the pros. If you do care about a consistency rule, you can go with the flexes. The only thing is you just gotta do a little bit more on the evaluation phase. That doesn't really matter. Next on the list is Alpha Futures. They have 3 plans that you can choose from, each having 3 different options. So on the premium plan, they have a 50% consistency on the eval, none on the funded. No daily loss limit. So if you hate that like I do, this is goated. There is no news rule and you can have a max of 5 accounts. Now, what really sets Alpha apart from everyone else is your qualification for a payout. You can withdraw up to 50% of your profits every 5 winning days of $200 and more. Let's say you're a newer trader and you get those 5 days of $200 in profit. You can request a payout
on that $1,000.
And what makes this even better is that your max loss limit doesn't reset to 0. What do I mean by this? If you request a payout, a lot of other firms, they usually move your max loss limit all the way up to break even, which basically on a 50K account, they move your drawdown from 48K all the way up to 50K just so they are protected. Alpha Futures doesn't do this. So let's say you request a payout on that $600, 50% of that, $300 payout, you still have 1.7K of drawdown to work with instead of other firms only giving you $300 to work with because you requested a payout. And this is a huge thing for newer traders in my opinion, because it gives the ability to get a payout so much easier and to get more payouts a lot easier as well. Because with Topstep, I don't know if you guys know this, they moved your max loss limit all the way up to 0, and it made you kind of second guess on if you should get a payout or not, because let's say you're up $1,000, kind of don't want your max loss limit to get reset to 0 and you only have like $500 to work with compared to the 2K that you would have, and you can maybe scale that. And then let's say you blow the account and you're like, crap, I should have taken that $500 payout and I would have been green, blah, blah, blah. It messes with your head. And then you start a downward spiral. I know you watching this video can relate because I can relate to this. Imagine if that first sequence that caused the downward spiral didn't even trigger. I'm going to be honest, if you traded with Topstep and liked them, you'll love Alpha Futures. They took all the good stuff from Topstep and made it better. The only thing that they don't have is uncapped payouts, which you take what you can get. Like I said, this only affects a small subset of traders that know how to trade properly. And if you are part of that, you can just request a max payout and continue requesting again and again. Now on the 0 account, we have no consistency rule on the eval and 40% on the funded. We do also have a $1,000 daily loss limit. One thing that sets the 0 account apart from the premium and advanced plan is no activation fee. So your all-in cost is $119 divided by whatever sale that they have going on. Usually it's like 20-25% off using code MO, of course. All right, no other code. Now, if you are an experienced trader and are willing to pay the $150 for the activation fee for some more benefits, and you can scale your account a little bit higher, I'd say go with the premium or the advanced plan. The advanced plan is pretty similar to the premium plan, but it has some benefits which cater towards a certain type of trader. Now their max drawdown is a little bit smaller. Their profit target is a little bit larger compared to the premium plan, 2K to 3K versus 1750 to 4K. Why would you want to go with this plan, Mo? They have a 50% consistency rule with less drawdown and a higher profit target. The thing that this account has going for it is that it has no consistency rule on the funded, and you can request up to 15K per account. So 3 accounts total, 45K per per payout cycle. This is not for newer traders because it is more expensive and harder to pass. But if you are an experienced trader and are willing to spend more money for a larger payoff, this account's for you. This account is mainly for you running up an absolute bag and are an experienced trader. If you are a newer trader looking for smaller payouts, don't even think about touching this advanced plan. Next on the list is Tradeify. They have 3 account types, each account type giving 4 different account sizes. So starting off on the growth account, normal profit target, normal end of day drawdown. They do have a daily loss limit and no consistency rule on the eval. They do have a consistency rule on the funded, which is 35%. A lot of other firms that I've talked about before have a 50 or 40% consistency rule, which makes this the lowest. Why would you like the growth option? If you like passing your evals fairly quickly and you don't really care about a consistency rule once you're funded, because let's say you might be a scalper and you only look to take base hits every single day, this account might be for you. The select account does not have a daily loss limit on the eval, but a 40% consistency rule. And you can see that there are 2 different paths that you can choose from on the select accounts. Depending on which you choose, you have different benefits. You can choose to get daily payouts, but if you do, you will have a daily loss limit. If you don't really care about daily payouts, then you can choose the flex account, which doesn't have a daily loss limit, and you can request a payout every 5 days. Now, every time you request 1 payout on the flex accounts, you can potentially request 5 on the daily accounts. It really depends on what type of trader you are. Now, if you like daily payouts, then go for it. And if you don't really care, then go for the flex. This plan is mainly for people that hate consistency rules on the funded account. We can see that the growth account does not have a consistency rule on the eval, but it does on the funded. Select has it on the eval, not on the funded. Majority of us would rather have it on the eval and not on the funded, I'm gonna be honest. Last but not least, their instant funding option, which is called Lightning. What's the catch? Similar to the Lucid Direct accounts, they have a whopping 20% consistency rule, which if you make $2,000 in a single day, you have to make 10,000 to even request a payout. That's not taking in you blowing your account before getting to that 10,000, which is highly likely. Some people like that, some people don't. If you are a high RR demon, this account is not for you. I'm gonna be honest. It really just depends on what type of trader you are and selecting the plan that fits your style of trading the best. There's no one plan that fits all. I'm gonna be honest. You can have 5 accounts total on each of these plans. Now let's talk about my funded futures. They have 4 different account sizes, each account having different plans. So let's go through all of them. The rapid account is pretty mid, I'm gonna be honest, because it has end of day drawdown on the eval and real-time trailing drawdown on the funded, which is so ass cheeks. Would not recommend at all. The only thing that this account is really good for is it has daily payouts and no consistency rule on the funded. It has a 50% consistency on the eval though. In my honest opinion, this is for people that want to run up an insane bag and don't really care about live trailing drawdown. I don't know any single trader that doesn't care about live trailing drawdown though, but anyways, if you are one of them, magically that top 0.01% that doesn't care about this account might be for you. So to recap, the rapid account is for daily payouts. The pro account, on the other hand, is for you to run up a bag. End of day drawdown on both eval and funded. No consistency rule on the funded, 50% on the eval. The best thing about this account type is that it has a max payout of 100K per account. You can have 3 accounts in total, which equates to 300K from a singular payout. Now that's if you don't get moved to live before you actually get that payout. Like I said before with the Alpha Futures Advanced account, this is only for experienced traders who want to run up an absolute bag. Now for the builder account, this is only for the 50K accounts. It literally says it is created to be the simplest path to payout. It is very beginner friendly and payout friendly. Very, very cheap with no activation fee. End of day drawdown on eval and funded. No consistency rule on the eval, so high-key you can just like gamble them like I do. And then once you're funded, you can trade them properly. These accounts are very, very similar to the Apex end of day 50K accounts. The thing that this does better is you can request a payout every 48 hours compared to Apex every 5 days. And you can only have 3 accounts total on my funded futures, 20 on Apex. Like I said, pros and cons with every firm. Now the flex accounts are very, very similar to the builder accounts. The only thing that is different is they have an eval consistency rule instead of a funded consistency rule. They give weekly payouts as well, and you only need 5 winning days of $150 for you to be payout eligible. Every single account has different payout structures. On the Flex accounts, you can request up to $5,000 per payout cycle, and that's on the 50K accounts, $3,000 on the Flex 25K accounts. Only thing I don't like about this firm is that there are just so many accounts and it can get pretty overwhelming on which account to choose from. So if you are looking to trade my funded futures, pay attention right here. Rapid account, if you want daily payouts and don't care about live trailing drawdown once you're funded. Pro account, if you don't want a consistency rule once you're funded and you have a payout cap of 100K and want to run up a bag. Builder account, if you like Apex's end of day accounts and want 48-hour payout windows. Flex accounts, if you want something similar to builder accounts but no consistency rule on the funded. Congratulations, you have mastered my funded futures. Next on the list is Topstep. I'm gonna be honest, these guys used to be top dog, owned the entire future space, and now they just fell off. It's one of the worst firms out there. I would really not recommend it anymore. You're forced to use Topstep X, which is a terrible platform, which is designed for you to think that trading is a game and increases the chances of you gambling. And the fact that the platform goes down fairly frequently is a cherry on top. They reduced payout caps, they increased prices. All around, they're not a good firm anymore. Now, if you do want to trade with Topstep, they have a 3K profit target, 2K drawdown. The max amount of payouts you can get is decreased. Your max payout is also decreased. I really don't want to get into them. Like, they're just not a good firm anymore. I would have if it was like 3-4 months ago, but these guys are bottom of the barrel. I would say C tier firm now. The only reason I'm talking about them in this video is because they used to be an S tier firm 5-6 months ago. If you want something similar to Topstep, go with Lucid. They're so much better and give higher payout caps. Now, what I would recommend when you're trading with these firms is to not trade all of them at the same time. Trade one of them, learn the rules, max out on that, then go to another, then go to another. Only go to a new firm once you've maxed out on the previous one. This way you can scale your funded portfolio properly and not get screwed over, because some accounts have no consistency rules. Some accounts do have it. Some accounts have daily loss limits. Some accounts don't. Trading them all at the same time is a recipe for disaster. But when you are maxed out with them, let's say 40 plus accounts, let's say you make an average of 10R per month, risking $500 per trade, you then have the ability to average $200,000 per month. This is an insane number that would not have been achievable without prop firms. You should be using each and every single one of these prop firms to their full potential. If you are a profitable trader not trading with them, you're leaving money on the table. And if you're unprofitable and are not trading with them, you are losing out on more money, because you can learn the same lesson without risking your own capital. You can put in $40 to get $2,000 of drawdown on an Apex end of day account. You can learn that you have a certain habit without you risking your own $2,000. Now, by the time you actually spend $2,000 on evaluation and funded accounts, you'll have so much more knowledge than you spending $2,000 of your own money scared as hell because it's your actual money on the line. And if you're not trading with them already, you're cooked.